Hi guys, it's your FX mentor Bliss Billion Dollar, and in today's video I want us to talk about the nature and structure of the market, right? So let's get started. So I want us to talk about two terms, which are the impulse as well as the correction phases. So let's define this. The impulsive moves are phases in the market where there is a heavy momentum movement before and after a correction. So a correction movement is just a tight low momentum price creating continuation or reversal patterns and all that, right? So let me use this example. So you see how the market moves if it's in a downtrend like this, right? So now this movement that goes with the trend is what we call the impulsive movement. Then this movement that goes against the trend, like here, from here, it was showing as though it's going up. So that is just a retracement, right? Yeah. So other mentors would say contraction and expansion. They have all these names, but they actually mean the same. So impulse, it's a movement in the direction of the trend. Then the retracement is a movement against the trend. Movement in the direction of the trend, movement against the direction of the trend. So before I go any further, I want to talk about this. Here is how I look at the market. I look at the market like, just a mere box, like, mere boxes like that. Yeah. Yeah. Okay. So here is how I look at the market. So what can we say about it? Excuse me, sorry. So what can we say about this? Here we have the market moving like that. It goes inside that box, moves however it wants, however it wants, however it wants, however it behaves, and boom, it goes down like that. Then here it moves however it wants, however it wants, however it wants. It can move in however it wants, boom. And here it moves however it wants, however it wants, however it wants, however it wants, boom, right? And it goes like that. Then boom, however it wants, however it wants, however it wants, however it wants, boom, and it goes like that. Here moves however it wants, just like that, So from here, this is how I look at the market. So these boxes signify what we call the correction. These are movements against the trend. Then this movement here, this smooth movement, is what we call an impulse movement. It is going together with the trend. So in these boxes, there are corrections. So you might find that, sometimes it will, in these corrections, it will, this is where you see trend lines and all that, blah, blah, and all that. I hope you get the concept. So let's proceed. You see what I was talking about. If we look at this particular market, right? You see this was an uptrend. We drew the trend lines. I'm sure by now you now know how to draw the trend lines. But then look at that. It falls. This was an impulse movement. Then boom, 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 boom. This was just a correction. This was just a correction. All this part was just a correction. Let me just try to, yeah. This was just a correction. This was just a correction. Then impulse. Then correction. You remember the way I was drawing those boxes? You see? Impulse, correction. You see, this is the actual market. Impulse, correction. So after an impulse, we expect a correction. So after that, we expected maybe a movement down like that. So if you're able to look at the market like this, you're able to say, okay, this is a correction movement. Let me wait for an impulse. Then after an impulse, you wait for a correction, then you enter on the impulse. So really, we find entries in the correction phases. And how do we spot to say this is going to go down or it will change direction, go up, or maybe here it was supposed to basically we are going to learn about that, and that is where the aspect of the patterns come in, right? So here I just want you to understand the idea of the correction as well as the impulse movements. So it doesn't always mean they'll have to look like this. It doesn't always mean they'll have to look like this, just a mere line. Sometimes they might present themselves in this form, whereby it makes a particular shape, and that particular shape is actually a correction phase. Let's continue. So to make it even more clear to you, let me give an example. Let's say we have a perfect downtrend and as the overall trend, and you agree with me that trends are not just straight lines. We have movements that go against the overall trend. Such movements are what we call corrective movements, and on the other side, the movements that go with the overall trend are what we call the impulse movements. And this is what I discussed. So now let's discuss the nature of the market. Nature can be defined as the characteristics with which price is moving. So nature in trading looks at the characteristics of price in the market, impulsing a correction known as the impulse phase. The market is ultimately made up of impulsive phases and corrective phases, right? Here, this is what the market is made up of. Just the correction and the impulsive movements. And the ability for you to know this is an impulse movement and this is a correction movement, your ability to know that gives you an edge in the market. So what is structure? Structure is simply the use of multi-time frame to draw a framework of reversal patterns. So you can check, from high time frame to low time frames, and you are able to draw certain patterns and all that, right? You see, impulse, correction, impulse, correction, impulse, correction, just like that. And you can do this on any time frame, and you're able to trade. Yeah, so what it truly means is that if the correction, during these corrections, this is where we see the patterns of price action playing out. Once we learn about price, the patterns will know. So if you see a particular pattern here, we're going to learn about, reversal patterns and all that. So once you see a pattern in the correction phase, you're able to tell the direction that the market will take. If it's a head and shoulders pattern that presents itself here, you're going to know the market is going to go down, right? So this was just a triangle. We knew it was going to continue because a triangle is a continuation pattern. Yeah. So that is something that you can read up. How to draw structure, that is something that you can read up. Yeah. And of course, we come back to the issues of the trend line, because trend lines play a very important role, and we're able to tell to say this is going to go up or down, right? So that was it, guys. I thought, this was very interesting and very short. Yeah, because I know these are very easy to explain and very easy to understand, right? So if you've got questions, we're going to answer those questions. So I'll see you in the next video.